Welcome back, everyone, to another episode of Real Talk Atlanta. I'm Ashley LeRae, and I'm here with my lovely co-host,
River the Realtor,
Neika W,
and Tiesha Renee.
And I'm so excited to be back. I feel like I haven't seen you guys since, what, a week, 2 weeks ago?
A long time.
What's been going on?
Longer than usual.
Yeah.
What's going on? What y'all been doing?
How's it been in real estate?
hell.
Takes a deep breath.
Okay. It's been tough.
It has. What's going on? I want to know.
It's been hella high waters,
Yes.
honestly, but I think that's every week in real estate.
Yeah.
When you're navigating this market, when you're doing the work that we do, it comes with the good, the bad, the ugly, everything in between, but
The high and lows.
okay,
Yeah.
real low.
I had
Yeah.
2 terminations this week, both from inspections. So y'all need to fix these houses right. That's all I can say.
I lost 2 offers. If you feel any better.
It's okay.
Me too. I've been losing.
It's
offers,
okay.
But you just got to keep trying.
You win some, you
Look, you
lose
win
some.
What's that? TikTok's like, another one. Thank you. Another one. Thank you.
Literally.
Yeah, it's been crazy. It's been crazy. All right. So this week I wanted us to talk about what it's like after you go under contract on your dream home. So we've already talked about, you've been pre-approved. You've chosen one of us as your realtor. You've been home shopping and you submit an offer. So what happens next after you get your offer accepted on your dream home?
It's time to put out the money.
Bring the bucks out.
Yeah.
Bring the money out.
That's like the most crucial part. So the first step I always like to think is submitting your earnest money as a buyer, right? And earnest money, I like to think of it as it's like a deposit with anything else, the money that you need to kind of put forward to show the seller that you're serious about buying their home.
Absolutely.
Yeah, I like to think of it. It's like with anything else, and you buy a car. When you go, a good example is when you go get your hair done. Sometimes you might need to put down a deposit to show that you really want to, go to your appointment.
Absolutely. My clients always ask me why so much for the earnest money. I typically, depending on the price point, do somewhere between 1% and 2%. But when they ask me why so much, I always tell them, if you get $50, you might not be inclined to work as hard to do your part with only $50 on the line. But
Yeah.
we're talking $1,500, $3,000. You as a buyer kind of want to do your part as well, and it shows the seller that you're serious. So
Right.
bring a little bit of bank to the table.
When you're dealing with an asset as big as a piece of real estate, we're handling hundreds of thousands of dollars. So of course, to show that you're serious, you're gonna have to put some money down. So it's typically at least 1%, but the more the better.
Right. If you're gonna be competitive, they probably your realtor might recommend you spend a little bit more, but you'll get it back. You're not gonna lose your money. You can, but if you got a good realtor, you won't.
And that's the real
Listen,
tea.
I do not play about earnest money, y'all. I feel like it is my duty as your realtor to make sure we always protect your earnest money. And I feel like those are the questions that people really want to know, especially from our last episode. A lot of people were asking about upfront costs. So I think this episode really is going to, put on the table for you guys on how much money do you really need to save
Yeah.
for buying.
Because when you get to the point where you're putting earnest money down, you're at the stage now where the seller has already agreed to take their home off the market and sell it to you. So yeah, that's just one part of the business is to show that you're serious and put at least 1% earnest money down, which is why it's important to have your savings, right?
At least, however, a strong offer, the earnest money does matter. So the higher the earnest money, the stronger.
Right.
Your offer
That
is.
price can fluctuate.
I'm
And
curious. Sorry, go ahead.
And you're going to have to pay it. Be mindful when your offer is accepted, you have to pay it in like X amount of business days.
I was
so
just
it'll
about
be
to
like
ask
1
that.
day or 2 days or 3 days. So you have to be ready once your offer is accepted to make that deposit immediately.
Yeah. And something I think is really important to point out is that you don't pay your earnest money directly to the seller. Typically, it's held by a third party like a lawyer. And that's where it stays until closing day. So don't think that you're just giving these people your money and they're just going to run off with it. No.
It's protected. It is safe.
Yes.
and sound.
Yeah.
Right.
Unless you try to terminate, then that's a whole nother story. You may not get it back.
I do kind of see as earnest money a way to make sure that everybody holds their bargain of the deal and to make sure that you're doing what you say you're going to do on that contract. And it is it's refundable. It goes towards your closing costs
Right.
for the end. So make sure you guys keep that in mind. It's kind of like you putting money up front. However, if you do everything that you're supposed to do in the contract, that will go towards your closing costs.
Right. Kind of like how I mentioned, it's similar to like a deposit when you book a hair appointment. So you make your deposit, and then once you get there, that goes towards the total cost, right? So same thing with earnest money. So you put it aside, and then it goes towards your closing costs, like you said. Okay, so once your earnest money has been deposited, now it's time to order your home inspection. So Neika, tell me a little bit about that.
Of course. So once I submit a strong offer on your behalf and our offer has been accepted, we have something called due diligence period. At all times, we do have a due diligence period. However, we also have a right to request repairs. So depending on the market or your offer, you have those, but you do have time to do your inspection. So during that time, you have the due diligence period is between 1 to 7 business days. 7 business days is stretching it, but this is
in this market, yeah,
it's very stretching it. So during that time, you will go ahead and hire an inspector. As your realtor, I will coordinate and schedule inspection for you. But before you go out and the inspector goes out and inspect the home, you will have to go ahead and pay him.
Yeah.
So that's one of the costs I feel like is very important to have up front, because it's usually going to be within, actually before the earnest money is due or after.
I have a question. So I want to make sure that I got this right, or for people listening, they know. So you got your earnest money deposit. That's about 1% of the purchase price, but how much is an inspection?
So for inspection, it varies. So the cost of inspection is based on 2 things: the square footage and the property type.
Okay.
For my preferred inspector, and I'm gonna break it down really good for you guys, under 4,000 square footage, the inspection cost will be around $400. Okay. And that's for single family homes. Now, if we're looking at townhomes and condos, it will range from $350 to $375 under a 4,000 square footage.
Now, a mansion,
Right. Once we start
gotta pay a little bit more money.
Yeah.
Right. Once we start getting into 4,000 and 6,000 square footage, the inspection cost will be around $575.
Okay.
And I'm basing these are base price, because when they're doing inspection, they're doing everything. So the backyard, the crawl space, if you have a beach house, they're also making sure they're inspecting like the whole property. And anything above 6,000 square foot is about like $875.
Let me tell you, that inspection report is long.
Yeah.
But you need it.
You
need
do.
it, because you don't want no surprises when you get in. You need to know like what the condition of this house is. So like never not get your inspection. Like never feel like I'm not going to get it inspected, because at the end of the day, you're probably going to end up paying more after you get in the house and you haven't had it inspected than when you did and you had it,
Yeah, and I was going to touch on that a little bit. A lot of my clients sometimes ask, well, why do I have to get an inspection, right? We went to the property. The home is beautiful. The home is great. And I'm telling them, when we go look at homes as realtors, as buyers, we're looking at, the finishes, the countertops, the flooring. You didn't get under that sink.
Right.
You did not check the pipes. You did not get on that roof. You did not get in that crawl space. We're not looking for those things, right? You're looking for what's aesthetically pleasing. You're looking at the neighborhood. You're looking at the school district. As a buyer, you're looking at things you can see with the naked eye. When we call in our preferred inspectors, they have drones that are getting on top of the roof. They're seeing cracks and windows and different things that if we don't find out beforehand and you go through with this contract, now you're liable. I recently had a client who just was so in love with this home, beautiful home, but the inspection came back and there was like plastic piping throughout the home. And they were pretty much saying like, you're either going to have leaks for the rest of your days here or the pipes are going to fall through, because this type of piping have been recalled back in the 90s. And so my client is just like polybutylene.
Yeah, that one.
My client, that's a very drastic thing. So it's
That's
like
a
if we
large
hadn't
cost.
we hadn't paid the $300, to get it inspected, you would have spent $300,000+ on a home that you're gonna have problems in,
right,
until you're ready to sell it. If you'll be able to sell it without fixing that cost on your own. So inspections, it's a little bit of money up front, but it will save you a headache and a heartache.
Absolutely.
And that's for resale and new construction.
That's
Some people
gonna
feel like they
ask,
get new
yeah.
construction. They're like, oh, it's new. So granted, it's not going to have as much issues as a resale, but it might be something small. Like maybe they find they did something wrong with electrical, they fix it really quickly. But even if it's new construction, you still want to get the home inspected just to be safe.
Yeah, these houses are man-made. Men
Yeah.
make mistakes.
They make
Right.
mistakes.
Mhm.
Yeah, it happens.
And if your realtor is okay with letting you know that you can waive inspection on a new construction, please contact me.
Okay, so I want to ask y'all, what is the craziest thing you've seen on an inspection report?
Speaking of inspection reports, one of my deals that terminated, that was the worst inspection report I had ever seen. There were 68 things on this report, and all 68 things were super significant. I think the seller might have been an investor, and I think he kind of went in and did the stuff himself. But like, they needed a new roof, they needed a new foundation. He just needed to tear the house down and build another one.
They'll get you like
It
that.
was they try to like make it, they'll put like stuff over it, like paint it. Then they had the year the house was built wrong, because you know lead-based paint, if it's built prior to 1978, you have to disclose that. They try to paint over the lead-based paint. The inspector was like, I can see it coming through. The house was actually built in 1954. It was a mess. I told my buyer, I said, you know what, I've already sent the termination for your signature, and we're going to go ahead and keep looking.
It's not worth it.
That's a no. That's a no.
River did say she kept smelling lead earlier.
Child, might have been on Tiesha.
I wasn't at the house. I wasn't at the house.
No, I would definitely say my craziest one kind of was like Tiesha's, in the sense that when I got the report back, I was baffled. I'm used to it being long, but usually long with like little things. It was like 27 pages of recommendations. I'm like, this cannot be good. But when we went in the house, it was beautifully staged. And I think that's where they got us. But you know, those inspectors, he's moving the couch, he's moving this. He was like, let me tell y'all what y'all didn't see when y'all went in there. The craziest part was that the listing agent actually kept asking, let me know when the inspection is. Let me know.
They be on edge.
Like,
Yeah.
well, it doesn't really concern you, but okay. The inspector said he met him at the door, followed him around the whole time. The seller, the listing agent.
Oh my God.
And he had the water cut off on the property, and that's what made him check those pipes. He was like, why is the water cut off? You know, usually you keep on the utilities, keep everything.
Of course.
He turned it on and then turned it off once he was done. So he left, and my inspector turned it back on, and he was like, okay, there are a lot of active leaks. And that's when he realized there was plastic piping. What they did was they only replaced the piping in places you can see it, so that it looks good. If you are one of those people that got under the sink when we was going to see the house, but you didn't see what was going on in that, that roof, that ceiling, everything. So that was a horrible.
He tried
terrible.
it. He tried. That's why he wanted to know when you was coming.
Right.
Meet you at the door.
I thought he told on himself, like just standing there watching. It's a little weird. I've had a inspection report that was like 70, 80 pages. Man, could you imagine going through that with your client?
70, 80 pages. That's a thesis.
It was very...
We are not in college.
Right. It was very detailed. I had PTSD from college for real, but nothing major on there. The inspector was just really thorough.
Really?
Thankfully,
I
yeah.
can appriciate that.
Yeah.
I can appreciate that.
I love looking at the photos.
But it wasn't nothing major?
Nothing major. The only thing that they noticed was some water damage in the garage.
Okay.
And we negotiated. The seller paid for it and got it done. So, or got it remediated. So,
Awesome.
yeah.
For me, I've never really had anything too crazy apart from foundation, like regular foundation issues. However, the other day I did receive an inspection report where the listing agent mentioned on the listing, on the actual listing on MLS, that the water was a public sewer, and then the inspection came back, it was a septic tank.
Ooh,
And
not
he
a
never
septic
knew
tank.
about that. So this is why another reason why, you know, I love the inspection reports, because we would have never found out. And now if the septic tank would have been full, it would, and it costs to drain that septic tank.
You would have had a mess.
Yeah, literally.
Yeah. And the seller's actually paying for it. So
That's great.
good.
That's great. That's
Yeah.
a main thing with an inspection report. If you're wondering, you know, if your inspection comes back like something crazy is on it, like what can you do to avoid, you know, issues with your inspection? Make sure that you're working with a realtor who's gonna go to bat for you. Try to negotiate with the sellers and see if they can fix something.
Yeah, I'm the Olivia Pope of real estate. Y'all know I'm
Right.
I know I'm
love
ironing
her.
you down. I'm gonna negotiate you down to get what I need to get from my client.
Right. And even if, because sellers are getting like greedy, they don't want to sold as is, they don't want to contribute. this is in your due diligence period, and if the inspection is bad, keep in mind that you can back out. You can back out. If it's wild, it's crazy, the seller can't come to terms on what we can do, then you do have the opportunity to back out, and you will get that earnest money back.
Yes. Absolutely. Okay, so on to the next topic. I want to know about appraisals, because now with this market, we're seeing people paying above appraisal. A lot's going on.
That's the hot topic.
Yeah,
of real
it really
estate.
is.
Okay, look, let me dibble and dabble on this one. Appraisals are super, super important. And again, just like the inspections, I always get clients asking, why is it so important for the home to be appraised? Well, if you're getting money from the bank, they're only going to give you what the house is worth.
Right.
So if you are under contract on a house, $500,000, and they appraise it, and the house is only worth $450,000, guess what? You're getting $450,000 from the bank. Now, if you have some extra money that you want to play with, be our guest. But they're only going to give you what the house is worth. That's very important, because who wants to unknowingly overpay for something, right?
Not I.
Excuse me. Who wants to unknowingly pay for something and not get their money's worth, right? Imagine being under contract, because I've had some issues with appraisals. Y'all know I had an appraisal come back in like $80,000 lower, and my client is like, there is no way I'm paying $480,000 for a house that's only worth $400,000, and I get that. But it goes to that, on both ends. So appraisals is one of those costs that you as a buyer have to cover. But it's important because you want to know how much your home is worth, right? You don't want to be paying top dollar and be getting low class, low grade home. Like, you just don't want that. You want to make sure that you're getting your money's worth at all times.
But you really don't even have a choice, because the lender is going to make you get an appraisal. Like, that's a requirement. But appraisal calls, they vary different on the loan types, right?
They vary. So you do get your appraisal directly through the lender, right? You don't go through us. You don't give us the money, because that gets into some whole other legal things that we don't want to touch. So your receipt, your invoice for that appraisal is going to come directly from your lender. And I typically tell my clients it ranges from anywhere between $500 and $700.
Yeah.
I would say on a typical resale single family home, even on a newer, townhome or single family home, $500 to $700 is really, really a safe number to expect to pay for that appraisal. And it's one of those upfront costs that you cannot run from.
You cannot run from.
You
It has to be
run,
done.
but you
Yeah.
cannot.
It has to be done. And it's not too much. It's not an extreme amount.
Yeah, it's not. It's a
much.
small cost for something really big.
Yeah, so know the value of your home.
Exactly. So I'm trying to tally this up in my head. So let's say a client wants to buy a $200,000 home. So 1% earnest money, that's $2,000
At minimum.
at minimum. You said the inspection's about $300.
Yeah, well, I
Or
would say
four.
if it's like 4,000 square footage, I'll say $400.
Okay, so now we're at $2,400, and then inspection's about $500, or appraisal is about $500.
Yep.
So now we're at, y'all, I'm bad at math. What's that,
29.
31? Oh, look, I'm wrong. Let's say 2,900.
Let's just say
let's just say
3,000
3 to be safe.
Okay,
3,000.
3,000. Okay, but we always got to remember, because everybody wants to know about a down payment.
Down payment is
How-
important.
How much they need for that? Let's talk about the down payment.
Again, like the last episode, down payment does depend on the loan type. So
Yeah.
FHA and conventional are your standard loan types. You have your VA and USDA loans. Don't forget about USDA. People forget about USDA. You
Yeah.
only got
Through
select
now.
areas, only select areas outside of the city. But those loan types, those are zero down payment. That's just automatic. VA and USDA do not pay a down payment.
Yeah.
And just to let y'all know, VA, for y'all who don't know, VA are veterans. So if you are in the military, you've recently or previously served in the military for X amount of years, it's all going to depend on your branch and things like that. But if you are military, that VA loan is for you, 0% down.
And that can go for military spouses as well.
Thank you for your service.
Thank you
Thank
for
you.
your
Thank you for
service. And USDA is for rural areas. But FHA and conventional are your standards, and those can range anywhere from 3 to 5%. FHA being like 3.5, conventional being 3 to 5%. So depending on the price of the house, if you're doing $200,000, mathematician on the mission, what is that?
Yes. So you figure for a $200,000 house, 3% down is going to be about $6,000.
I'm about to go 6,000.
But wait, it's crazy because a lot of people think that for a conventional loan, you still have to put down 20%.
No,
Look, the myth.
the
legend.
myth. They
The
say
lies.
put down 20% so you don't have PMI, but that's a whole nother conversation. PMI is purchase mortgage insurance, but that is a whole nother conversation for a
Correct.
whole nother episode. So tune back in. We're gonna cover that, just not right now.
Yeah.
Right. But yeah,
that's
you
a
can
whole
do
nother
3%
thing.
down. So if we're talking 200,000, 3% down, that's 6%. I'm sorry, that's $6,000. So now we're at $6,000 for the down payment.
$3,000 for the other costs.
Right.
Let's just give it a good $10,000.
10,000. Yeah, because not everybody has 20% to put down just for the down payment.
Right. But if you want to, if you can, do it for sure.
Yeah, definitely.
The more the better.
Okay.
Do you, boo?
So the final part, the closing costs.
The part that everybody forgets about, I feel like.
Yeah, they be left out, the closing costs.
Today I read an article that said that 41% of first-time home buyers actually is shocked when they find out that they have to pay
closing costs.
Yeah. Wow.
Because a lot of first-time home buyers say, "Oh, I have down payment assistance. I don't have to pay anything up front," which is, again, not true.
Or our favorite, when my mama bought her house, she didn't have to put no closing costs. Well, sweetie, let me tell y'all, times have changed. Hey, Mom.
There are closing costs.
Let's go back to Mom for a second, because when we was talking about the inspection, don't bring your parents to the inspection.
But some people want to bring their parents to the inspection. I might want to bring my dad there.
At everything.
And do it. And what's that right there?
Yes.
Because I need to know what it is.
I terminated because of that.
No.
I'm still salty about it.
I can't even, I'm probably the one who's going to bring my daddy to the inspection. Because, Daddy, can you come with me and make sure everything is right?
Not your daddy an inspector now.
He can be.
Okay, back to the topic. Closing costs. So,
closing costs are I always estimate about 3 to 3.5%. And it's different things that factor into it because you have it's for the people working on the deal, basically.
Right.
Your lender and your attorney. And in Georgia, you have to close with an attorney.
Yes.
You're an attorney closing state.
So you have your lender's fees that are into your closing costs. You have the taxes, prorated taxes that you have to pay to your closing costs. All different type of
if there's an HOA, prorated HOA.
For title.
There's
a lot of stuff that goes into it. People think it's just the house and I'm purchasing the house and that's it. But you got to think there's a lot of people doing a lot of work on your behalf behind closed doors. And those people have to get paid too. So like I said, I know your mama may not have to do that back in the day when she bought a house. But just with the competitive nature of the market, if it comes down to, okay, we have two offers on the table. This person is willing to pay their closing costs. This one wants me as the seller to pay for it. I'm going to go with the one who's going to to the table.
Yeah.
You got to put yourself in the seller's shoes sometimes.
Right.
Think about that.
Right. Unfortunately, like in this market, most likely your realtor's not going to say we're going in asking for a closing cost. Right. Again, you get your inspection, you negotiate. If the seller doesn't want to fix it, you may get a closing cost contribution. So, that all goes into it with it could be covered, it could be not.
Yeah. So be prepared to pay it.
Be prepared to pay it.
That's the biggest thing. Prepare yourself for the absolute worst. But once you get one of us as your realtor, child, you just never know.
You never know what can happen. Right. You might pay it, you might
not. And I feel like that's why a lot of people wants to go the new construction route, just because now lenders, communities are actually giving out incentives who are closing costs up to $2,000. And who doesn't want that?
Let me tell y'all, I found a new construction community. You got to contact me if you want to know more about it. But they were offering $11,000 towards closing costs.
Who that is?
I'll tell you later.
Give me the tea.
11,000. I haven't seen that like in my whole real estate career so far.
No, I actually had a client get 12,000.
Yeah. Wow.
Well, they actually like increased the price like in the contract, so they upped the closing costs too. So it ended up being like 12,000. We're like, okay, cool.
Wow.
So it happens, but let me know who that build is.
No, me as well, please, me.
Put it in the group chat.
Okay, so let's wrap it up. We received so many questions. I'm so excited.
Right. I hope this cleared it up and at least gave you a better idea of what to expect and what you can prepare for when you are ready to purchase a home. If you got more questions, always slide in our DMs.
Yes.
They're open for business.
For business purposes
only. Okay, so let's get into the final segment, the question of the week. This is my favorite part. I'm
iffy because I'm nervous.
I'm always nervous.
Why are you guys nervous?
Because I don't know what's coming out of that bucket.
That's the fun part.
I don't know what people want to know. But I'm going to tell you anyway. Because it's Real Talk Atlanta, so we can tell you anyway.
Real talk. Okay. Don't peep. So today's question is, this is interesting. What are the pros and cons of using a down payment assistance program?
Who wants to kick us off?
I'm for down payment assistance programs. The only thing with down payment assistance programs, your interest rate is going to be a little higher. And the requirements to get it credit score wise are going to be a little higher as well. So you need about 620 down payment assistance, you're gonna need $640. I think outside of the interest rate being a little high, I mean, it just depends on, do you want to pay more costs up front, or do you want it in the back end in your monthly mortgage? So that's just kind of the question you have to ask yourself when you use the programs. But I think if you don't want to pay a lot of money to move in, then use a down payment assistance program.
Yeah. It's very situational. It depends on like your timeline, because like a program like Neika or something, it takes a while to get through those programs.
You have to be patient. You have to be patient.
If you're someone who's looking to buy a house like in a couple weeks, a month, that probably won't be the best option for you. Mm-hmm. But there are a ton of programs out there. You just have to get with our preferred lenders and find out what they can offer you that's really tailored to your situation.
Mm-hmm. Yeah, I would definitely agree. I think the pro obviously is you're getting some assistance, right? All these upfront costs we talked about, the closing costs, the down payment, things like that. Anytime you can use a resource that's going to put a little extra bit of money in your pocket, hey, I'm all for it. Mm-hmm. I would say probably the biggest disadvantage for me is, like you said, the timeliness, right? We're in a market where, as Neika said, time is of the essence.
It is.
Time is. People just don't want to. People just don't want to wait, that long when they're getting offers with 21-day closes and things like that.
But wait, they can do that. Let me tell you, I got some in-house lenders who offer in-house down payment assistance loans, and they can close you the same amount of time as someone who can close, maybe not 14, but 20, less than 30 days, you can still be in your house with down payment assistance.
Right, and that's the importance of just like reading about the program.
Right,
that's what I was
different programs.
Different programs have different things, but you also as a buyer, and us as realtors, of course, will educate you, but you have to understand like what comes with it. Some of these programs will put a second mortgage on your house, or some of them will require you to pay them back if you sell your house for X amount of time. So there are definitely pros and cons, but I think understanding, figuring out what your situation is and what best fits your needs, I think down payment assistance can be a really good program.
Right. Yeah. And for me, I want to give a pro as much as I want to. For me, I feel like down payment assistance is kind of like a trick. It's kind of saying like, hey, you can get this for like less money now, but really when you start paying on it, especially the interest rate, you pay way more on the life of the loan.
I agree.
Which is like, I'd rather for you to save before buying a home and actually thinking that you're getting this for free, getting some advantage up front, and you're not. I'm not even gonna cap like
no cap.
No cap.
No cap.
It's you might think you're getting something really good, and then you have to apply. You got to make sure just the process is not worth it when you know that along the way you're gonna be paying way more.
Yeah.
For.
Another con I would say are like the stipulations on some of these programs. I had a client, she was only, for her program, she could only shop in Atlanta. So we're like, okay, let's search everywhere in Fulton in Atlanta. And like there was a stipulation, it was something like it had to be in the city of Atlanta. Something weird, like the county
had to be Atlanta, Georgia.
Yeah, there's so many stipulations and
they might not approve it. And for that same program, I know exactly what you're talking about. You have to write an essay and do an interview.
They're getting a scholarship.
I was about to say, this ain't school.
Like a grant.
We've been a lot.
I'm going to have to agree with no cap Neika.
Yeah.
So, I mean, it's a price you have to pay. It just depends on you. Whatever you're comfortable with, we can pretty much work with that. So, contact us.
Yeah. That's the real talk.
That's the real talk of Atlanta.
Yes, ladies. I'm going to toast us out.
Yes, let's do a toast. We gotta say something positive, a positive affirmation.
Cheers to having funds for upfront costs.
Yes, cheers to that.
You have more fun when you have fun.
Cheers. And we will catch you guys next week on the next episode of Real Talk Atlanta. Thanks for tuning in.
Bye.